It's time to answer your Twitter questions as we do every Monday here on the floor of the New York Stock Exchange with Jim Cramer. And Jim, of course, all eyes will be on Apple later today ahead of its big event. And we have one from Mike who wants to know how you feel about the stock heading into it.
Okay, look, you never buy it on these things because someone's going to be disappointed. There's more likely a chance for people to be disappointed than there are for people to be excited. So I figure Apple sells off, and that's when you do some buying.
All right, Sig57 here wants to know if you're adding to Twitter in your Action Alerts Plus Charitable Trust portfolio.
I talked about this with Jack Moore, who is the head of research. I think that it's the right thing to do. The JP Morgan piece was just amazing in terms of monetization. But now that we talked about it, as we talked, I'm frozen in it. But I will tell you that in the actual reiteration is a lot about native advertising and video, and that's where I think is the next level of monetization coming from Twitter.
Okay, Jeff asks for your long-term view on AbbVie. He wants to know if it's a buy here or wait for more of a pullback.
I think AbbVie's going to continue to get shelled here. We're a little upset that the stock has come down as much as it did, but obviously they needed to have something to replace Humira, and this is their one of the things. They need to do another deal.
Let's talk banks. Nitsan here asks, which should I have in my top 5, Morgan Stanley or Wells Fargo?
I think that Wells Fargo is probably better because that's the one that really does best when the Fed raises rates. And then secondly, Morgan Stanley. Morgan Stanley, I wish they had fared better in the stress test, but I think that they'll be fine.
Okay, next one comes from Jay, who says Cisco has found its groove the past couple of quarters. Any concerns to watch for?
Well, look, I think that Juniper, there was an upgrade today saying that Verizon and AT&T are going to start spending. If that's the case, you should be buying Cisco because that's the two accounts that have really hurt them in the short term.
And lastly, I know you're a fan of Disney, but Chris wants to know if the stock's current price includes all the money yet to come from Star Wars.
Well, I think that what happens with Disney is that you all expect Star Wars and then something else occurs that's positive. Look, I think Disney should come down. It had just a remarkable run. I would rather buy this thing at 102, 101 if it gets there. And this is a good stock to buy if we have another one of these rate scares.
All right, there you have it. Thank you so much, Jim. And make sure to tweet your questions for Jim every Monday using hashtag CramerCube. That's Jim Cramer, and I'm Brittany Umar for The Street.